Hi, my name is Nurul Natasha binti Rozaini.
Hi, my name is Siti Nurdiana binti Muhammad Kamal.
Hi, my name is Siti binti Abdul Hamid.
Hi, and assalamualaikum to Madam Salwani Binti Affandi and all the judges and panelists. My name is Fatin Nadia binti Khairul Anuar from BA 243E, and I am here today to talk about the education insurance. Do you know what is education insurance? Education is one of the parents' responsibilities, and undoubtedly it is very expensive and it's not getting any cheaper with the rising charges and general cost developments. And education insurance is a policy product that is designed as a saving instrument that pays a lump sum to cover your children's education when they turn 18 years old and also when they are about to enter the university. Meanwhile, the Takaful education plans provide coverage in the event of death or total and permanent disability called TPD. It is also originally came with payer term rider, which protects your child from financial hardship in the event of unforeseen circumstances such as the participant's death or permanent disability. Does it really necessary for you to take the education insurance for your children? I would strongly say yes, because it's for the future saving. Even if you're not present, you still can financially secure your child's future educational needs and use the money to pay for college, hostels, and illness expenses. By making a small amount of money as an investment, it will grow into a sizable sum in the future. Other than that, to secure the money with the uncertainty economic situation, it is critical for the parents to ensure their money in the hand of a professional third party, because the economic system in every nation in the world never reaches the same point from time to time. Now, let's talk about the insurance coverage. How much it would cover for your child education. First of all, the coverage is depending on your situation and the plan you choose. How does it work? Firstly, where does your child intend to study? At locally or abroad? If you want your children to study overseas, it would be very helpful if you could determine which country you would favor to choose based on the country's living costs. And another factor to look about is your preferred university. You must keep in mind that the top universities and some courses, such as medicine, are much more costly than others. And another point to consider is the number of years expected to accomplish the studies. A longer course would require you to dig deeper into your pockets to cover the additional expenses.
I will talk about who should take this insurance, an example of insurance in Malaysia. So, who should take this insurance? When it comes to purchasing life insurance, the most important consideration is if you have any financial dependents in your life, such as family members or employees. The following are some of the categories of persons who might benefit from a policy. First person who will benefit from this policy is parents with small children or dependents with specific needs. Many adults or parents-to-be will start thinking about life insurance for the first time after the birth of child, and with a good cause. Unless you can get the financial support from your savings, your spouse, or partner's salary. In other words, you will obviously need a financial support. Moreover, if your children are older, like in high school or in university, you may want an insurance that can cover your children for education fees until they enter the workforce. A 5 or 10 years policy may be all you need if you buy term insurance, which is the cheapest and simplest type of coverage. And for dependents with specific needs, maybe some of people out there might have disabilities children that need this insurance to take care of their children when they pass away. A life insurance policy can provide financial protection for disabled dependents without have a financial conflicts after you are passed away. Second person who will benefit from this policy is adults who have taken out private student debt. In general, many young adults who does not have children are usually avoid to purchasing typical life insurance. Those young adults that have private student loan with a guarantor, on the other hand, may qualify for an exemption. Although some parents does not obligated to repay federal student loan if their children pass away. However, this case is not always same with private loan. It is because some of private lenders may pursue anybody who guarantor on the debt. So, if you're concerned about leaving your family in worry, consider a term policy that covers the lifetime of your debt payback. You can easily let the policy lapse if you finish paying off the debt ahead of the time. For the next topic that I will talk is example of real product for insurance in Malaysia. Example insurance in Malaysia is child education insurance plan. It is to help your child education for do not affect if some cases arise. Because child education insurance plan is essentially a life insurance policy that provides security and a savings platform for your child's future. It assures that your child receives the education they desire by providing a lump sum payment at maturity or in the event of an desirable circumstance, ensuring that your child education is not jeopardized even if you're not present. Your child will have a life insurance in event of an adverse occurrences. Here are a few more compelling reasons to purchase a child insurance policy. First is lump sum compensation, which is some child insurance plan provide a lump sum payment to your children if you die during the policy period. Second is waiver of premium. Your child will not be bothered by premium amounts because the company will handle them on your behalf. As a result, the policy will continue to exist. Next is partial withdrawal. You can get your funds at any time during the term in the form of partial removal, subordinate to limitation. This will cover all of your child's education milestone. Another reason is tax benefit, which means under Section 80C of the Income Tax Act, such a policy extends tax profit to the policyholder.
Insurance companies mostly offer education plan along with insurance cover. Parents in Malaysia need to provide savings for their children's future to meet the cost of education that may increase every year. The cost of children's education should be placed in family budget planning. Small or large income you have, control your spending habits and manage your finance wisely for the future of your children. A case study by London-based expert market showed that Malaysia is listed as top 5 most expensive country to pursue university education based on household income, while Hungary is a country with household income that listed as the most expensive country for the cost of university education. Parents in Malaysia allocate more than 50% of their salary to cover the cost of their children's education until graduation, even though that the total cost and fee of study at public university rarely exceeds until 30,000 ringgit Malaysia. But the reality is that so many people is unable to continue their study due to financial problems. Education is a continuous effort toward further developing the potential of individuals to produce Malaysians who are knowledgeable, skilled, virtuous, responsible, and be able to achieve personal well-being. Children education is a form of long-term investment to ensure that the country has leaders of caliber in the future. In addition to forming a society that is knowledgeable, integrity and quality is important to us. Parents are the catalysts that can change and shape the future of children.